Hello and welcome back to the channel. A complete guide to triple candlestick pattern trading video you will ever need. When it comes to trading, the triple candlestick are the most reliable, useful, and more demanding pattern among traders. To identify these patterns, you need to look for a specific formation that consists of 3 candles in total. These patterns shows how the price behave for the duration of this 3 candle. Some of these patterns are bullish or bearish continuation pattern, and some others shows the end of an uptrend or downtrend and the start of a new trend in opposite direction. I am also going to compare the result of these patterns with candlestick math blending and then talk about the psychology behind single, double, and triple candlestick pattern and formation. Since there are so many triple candlestick pattern and formation out there, and to explain all of them is beyond the scope of this video, but the most common triple candlestick pattern used among traders are triple candlestick morning and evening star reversal pattern, triple candlestick 3 inside up and 3 inside down reversal pattern, triple candlestick Tasuki upside and Tasuki downside continuation pattern, triple candlestick bullish and bearish abandoned baby reversal pattern, and finally the last one is triple candlestick upside to cruise reversal pattern. The first thing I'm going to talk about is triple candlestick morning star reversal pattern. Morning star pattern consists of 3 candles. The first one is a strong bearish candle signifying a continued drop in prices. The second one is a small bullish or bearish, or can also be a doji candle with a small body that close with a gap down below the first candle with negligible change in price. Finally, the third candle opens with a gap up and close within the body of the first candle, preferably above the halfway point of the first candle. If you see this pattern at the bottom of a downtrend, it suggests the downtrend is near the end, or you may have a downtrend reversal. You can also obtain same result using candlestick math blending. To blend this pattern, it's so easy. You can take the open of the first candle, you can take the close of the last candle, you can take the portion between open and close, and the high and the low of the pattern. The equivalent is nothing but a strong bearish hammer with 3 days time frame. The color, of course, is not important since the body of the candle compared to the range is very small. You can go long as soon as the price passes the high of the equivalent and put your stop loss below the low of the equivalent. Some traders, they prefer to go long as soon as the price rises above the bullish candle and put their stop loss 1 or 2 ATR below the low of the pattern. That's how you trade triple candlestick morning star reversal pattern. Triple candlestick evening star reversal pattern. Evening star is a triple candlestick pattern that can be seen at the top of an uptrend, signifying the uptrend is near the end, or we may have an uptrend reversal. This pattern forms over 3 days period and consists of 3 candles. The first one is a strong bullish candle signifying a continued rise in prices. The second one is a small bullish or bearish, or can also be a doji candle that opened with a gap down, with the gap up, and closes with a short body and negligible change in price. The third candle in day 3 starts with a strong bearish candle, gap down, and closes within the body of the first candle, preferably beyond or below the halfway point of the first candle. You can also get the same result using candlestick math blending. To blend these three candles is so easy. You can take the open of the first candle, close of the last candle, the portion between the open and close, and finally you get the high and the low of the pattern. The equivalent is nothing but a strong bullish shooting star with 3 days time frame. Of course, the color is not important since the body of the candle compared to the range is very small. You can go short as soon as the price drop below the low of the equivalent and put your stop loss above the high of the equivalent. That's how you trade triple candlestick evening star reversal pattern. Example, how to trade morning and evening star reversal pattern. This is the price trend, BLDP stock, D1 time frame, Yahoo Finance. At the top of this uptrend, you see an evening star, which starts with this big bullish candle, gap up, and we have a small bearish candle, could be bullish, small bullish, or it could be a doji, and gap down, we have this strong bearish candle that it closed within the body of this bullish candle. So that's evening star, all right. So traders, they can go short or exit the trade as soon as the price drop below the close price of this bearish candle and put their stop loss maybe 1 or 2 ATR above the high of the pattern. So the price is then after that going down, and at the bottom of this downtrend we have again a morning star. Start with this strong bearish candle, gap down, and we have a small bearish here, and gap up, we have this big bullish candle that it closed within the body of this candle, this bearish candle. So traders, they can enter the trade as soon as the price rises above this bullish candle and put their stop loss maybe 1 or 2 ATR below the low of the pattern. Or you can use candlestick math blending and you get the same result as I explained in my previous slide. And you see after that the price is going upward. So that's how you trade morning and evening star reversal pattern. The next pattern I'm going to talk about is triple candlestick 3 inside up reversal pattern. The triple candlestick 3 inside up reversal pattern consists of 3 candles. The first one is a strong bearish candle. The second one is a bullish candle in such a way that the body of this bullish candle be totally engulfed by the bearish candle, and this bullish candle should be closed above the halfway of the bearish candle. And the third candle is another bullish candle that closes above the bearish high. If this pattern happened to be at the bottom of a downtrend, you have a 3 inside up pattern, all right. And if the price break the high of the third bullish candle, it triggered a large bullish movement in the market, and traders should be prepared to go long. You can also blend these candles with candlestick math blending and get almost the same result. To blend these candles is so easy. You can take the open of the first candle, you take the close of the last candle, you get the portion between open and close, then you take the high and the low of the pattern. The equivalent is nothing but a strong bullish hammer with 3 days time frame. And if you see this bullish hammer at the bottom of a downtrend, it suggests a downtrend reversal, same as the 3 inside up reversal pattern. Isn't it amazing? Here, traders again should prepare to go long. Triple candlestick 3 inside down reversal pattern. This pattern consists of 3 candles. The first one is a bullish candle. The second one is a bearish candle that is totally, the body of this bearish candle be totally engulfed by the bullish candle, and this candle should close below the halfway of the bullish candle. The third candle is a bearish candle in such a way that the close price of this bearish candle should be below the low price of the first candle. Now, if you see this pattern at the top of an uptrend, it suggests an uptrend reversal, and traders should prepare to go short. You can also blend these candles, this pattern, with candlestick math blending, and the equivalent is nothing but a strong bearish shooting star with 3 days time frame. And if you see this shooting star at the top of an uptrend, it suggests an uptrend reversal, and traders should prepare to go short, same as 3 inside down reversal pattern. Isn't it amazing? Example, how to trade 3 inside down reversal pattern. This is the price trend, DOC stock, D1 time frame, Yahoo Finance. At the top of this uptrend, you see 3 inside down reversal pattern. You see this bullish candle, the first one, and the second one, this bearish candle, which is engulfed by the bullish candle. And the last one is a bearish candle, which closes below the low of this bullish candle. So if you see this pattern at the top of an uptrend, you can exit the market as soon as the price drop below the close price of this bearish candle, and you put your stop loss maybe 1 or 2 ATR above the high of the pattern. So that's how you trade 3 inside down reversal pattern. Example, how to trade 3 inside up reversal pattern. This is the price trend, BLD, PS stock, D1 time frame, Yahoo Finance. At the bottom of this downtrend, you see 3 inside up reversal pattern. This is a downtrend, and this is the first candle is a bearish candle. The second one is a bullish candle, which is engulfed by this bearish candle. And the last one is a bullish candle, which closes above the high of this bearish candle. Now, if you see this pattern at the bottom of downtrend, you can enter the market as soon as the next candle rises above the close price of this bullish candle, and you put your stop loss maybe 1 or 2 ATR below the low of this pattern. And you see after that the trend is going upward strongly. So that's how you trade 3 inside up reversal pattern. The third pattern I'm going to talk about is triple candlestick upside Tasuki gap continuation pattern. Upside Tasuki gap consists of 3 candles. On the first day, we have this strong bullish candle. On the second day, we have a small bullish candle that gap up with the first one. On the third day, we have this small bearish candle. It is important that the close of this small bearish candle be in between the gap. The upside Tasuki gap is a bullish continuation pattern that occur after a prior uptrend and suggests a continuation of that uptrend afterward. The psychology behind this pattern is as follows. A bullish candle continues. The uptrend is the first a strong bullish sign. The gap up is the second bullish sign, which shows the uptrend continues. The 2 small candles is an area of consolidation after the gap, and the gap usually acts as support area during an uptrend, and the small bearish candle is using this gap as a support area. These are a strong valid reason for the trend to continue going higher. So traders should wait for the next bullish candle, and as soon as the price rises above the high of the pattern, you can enter the trade and put your stop loss below the low of the small bearish candle. This is how you trade the upside Tasuki gap continuation pattern. Triple candlestick downside Tasuki gap continuation pattern. This pattern has three candles. The first one is a large bearish candle. The second one is a small bearish candle that gap down with the first one. On the third day, we have a small bullish candle. It is important that the close of this small bullish candle be in between the gap. The downside Tasuki gap is a bearish continuation pattern that occurs after a prior downtrend and suggests a continuation of that downtrend afterward. The psychology behind this pattern is as follows. A strong bearish candle continues. The downtrend is the first bearish sign. The gap down is the second bearish sign, which shows the downtrend continues. The two small candles is an area of consolidation after the gap. The gap usually acts as resistant area during a downtrend, and the small bullish candle is using this gap as a resistant area to continue going lower. These are the strong, valid reason for the trend to continue going lower. So traders should wait for the next bearish candle, and as soon as the price drop below the low of the pattern, you can exit the trade and put your stop loss above the high of the small bullish candle. This is how you trade the downside Tasuki gap. How to trade upside Tasuki gap continuation pattern. This is BB stock D1 time frame Yahoo Finance. At the top of this uptrend, you see an upside Tasuki gap. This is a long uptrend, and you see this uptrend, and this is the SMA 20, and you see that the price is above the SMA 20. That's the sign that this is an uptrend. Here you see the first one is a big bullish candle followed by a small bullish candle with a gap, and finally the third one is a bearish candle that it closed within the gap. So that is upside Tasuki gap, all right? In order to exit the trade, you have to wait for the price to drop below the close price of this bearish candle or below the low of this bearish candle, and then you put your stop loss 1 or 2 ATR above the high of the pattern. And that's how you trade upside Tasuki gap continuation pattern, and afterward you see the trend is continue going upward. How to trade downside Tasuki gap continuation pattern. This is Bombardier stock D1 time frame Yahoo Finance. At the middle, in the middle of this downtrend, you see a downside Tasuki gap with a small variation. This pattern starts with this big bearish candle followed by a small bearish candle with a gap down, and then the third candle is a small bullish candle. So you see after the trend is going downward, so the traders should exit the trade as soon as the price drop below this small bearish candle and put their stop loss 1 or 2 ATR above the high of the pattern. So after that, you see the trend is going downward sharply and continue going downward sharply. It originally coming down and continue going downward all the way. So that is how you trade a downside Tasuki gap continuation pattern. The fourth pattern I'm going to talk about is triple candlestick bullish abandoned baby reversal pattern. This pattern consists of 3 candles, and the first candle is a strong bearish candle that established within the well-defined downtrend. The second candle is a doji that open and close are almost at the same place and gapped down with the first bearish one. The third candle is a strong bullish candle that gap up and opens above the doji and closes below the first candle. The psychology behind the pattern is as follows. The price has been dropping strongly, and then the price formed a doji, symbolize an indecision showing the sellers has no interest to push the price lower and losing momentum. The buyers are starting to step in. This shows the buyers have gained control over the sellers. If you see this pattern at the bottom of a downtrend, it suggests the downtrend is near the end, or we may have a downtrend reversal. Traders should enter the trade as soon as the price go up above the close price of the bullish candle and put your stop loss below the low of the pattern. This is how you trade bullish abandoned baby. You can also blend this pattern with candlestick matte blending, as I explained earlier in my previous slides, and obtain the same result. Triple candlestick bearish abandoned baby reversal pattern. This pattern consists of 3 candles, and the first one is a strong bullish candle that established within the well-defined uptrend. The second candle is a doji that open and close are almost at the same place and gapped up with the first bullish one. The third candle is a strong bearish candle that gapped down and opened below the doji and closed above the first open candle. The bearish abandoned baby pattern is more of a rare formation that you may not find it more often. However, if you find it, it is both profitable and reliable. The psychology behind the pattern is as follows. The price has been going up strongly, and then the price formed a doji, symbolized as indecision, showing the buyers has no interest to push the price higher and losing momentum, and sellers are starting to step in. This shows the sellers have gained control over the buyer. If you see this pattern at the top of an uptrend, it suggests the uptrend is near the end, or you may have an uptrend reversal. Traders should exit the trade as soon as the price drops down lower than the close price of the bearish candle and put your stop loss above the high of the pattern or bearish candle. This is how you trade bearish abandoned baby. You can also blend this pattern with candlestick matte blending, as I explained in my previous slides, and obtain the same results. Example, how to trade bearish abandoned baby reversal pattern. This is the price trend, K-stock, D1 time frame, Yahoo Finance. In this graph, you see a bearish abandoned baby at the top of an uptrend. This is an uptrend, and you see this pattern that is bearish abandoned baby. The first candle is a bullish, and then a doji, and then you have a bearish candle that gapped down with this doji and closed above the open price of this bearish candle. So after this, you see the trend start going downward strongly. So in order to trade, you have to wait for the next bearish candle that drop below the close price of this bearish candle in the pattern, and then you put your stop loss 1 or 2 ATR above the high of this pattern, or you can put above the high of this bearish candle, maybe 1 or 2 ATR. That's how you trade bearish abandoned baby. The second example, how to trade bearish abandoned baby reversal pattern. This is the price trend K stock D1 time frame Yahoo Finance, and as you see, you have a bearish abandoned baby at the top of this uptrend, and after this pattern, you see the trend is going sharply down. Now, in order to exit the trade, you have to wait for the next bearish candle to drop down below the close price of this bearish candle in the pattern, and then put your stop loss 1 or 2 ATR above the high of the pattern. So that's how you trade bearish abandoned baby. The last pattern I'm going to talk about is triple candlestick upside gap to cruise reversal pattern. This pattern consists of 3 candles, and the first candle is a strong bullish candle that established within the well-defined uptrend. The second candle is a small body bearish candle that gap up with the first candle and open and close above the first candle, the first bullish candle. The third candle is a strong bearish candle that opens above the second candle and closes below the close price of the second candle. This bearish candle engulfs the second candle and also close above the close price of the first candle. The psychology behind the pattern is as follows. The strong bullish candle loses its momentum by forming small bearish candle, and as soon as the third candle closes below the second candle, that is the time traders use to exit the trade and put their stop loss above the high of the pattern. This is how to trade the upside gap to cruise reversal pattern. Example, how to trade upside gap to cruise reversal pattern. This is the price trend Apple stock D1 time frame Yahoo Finance. At the top of this uptrend, we have this pattern that start with the bullish gap up and have a small bearish candle followed by another strong bearish candle that engulfs this small bearish candle and closes above the close price of this candle. So you see after this the trend is going down sharply. Now traders should exit the trade as soon as the next candle or the price drop below the close price of this bearish candle and put their stop loss 1 or 2 ATR above the high of this pattern. So that's how you trade upside gap to cruise reversal pattern. What is the psychology behind single, double, and triple candlestick pattern? I am certain my 3 consecutive videos I have published on single, double, and triple candlestick pattern and formation so far have given you a pretty good idea how these chart pattern and formation work. We have hundreds of patterns and formations which demonstrate the battle between buyers and sellers which all happen near support and resistance area. When the price of any stock break below support area, it turns into resistance, and when the price break above the resistance, it turns into support. And traders always watch these trend behavior near the pivot zone to enter the trade. Patterns appear near support or resistance show us through price action how we can enter the trade at the right time and moment and make profit. The price always reverses near support or resistance and have a tendency like history to repeat itself since it cannot continue going up or down forever. Traders try to identify and interpret these patterns to discover the future direction of the stock based on how market react when similar patterns appear in the past. It is absolutely amazing if traders combine technical analysis with fundamental data point to get the best performance and efficiency. When prices go up with a big momentum, the candles are getting bigger and bigger and more powerful, and as it approaches resistance, it becomes smaller and smaller toward becoming a doji, which is a sign of low volatility and indecision. If you see a bullish reversal pattern at the top of an uptrend, it means the bull have no interest to push the price higher anymore, and the enemies like the sellers take advantage of this action and step in, and soon after we see the trend reverses its direction with a big probability. This is the moment that traders take advantage and prepare to go long. Same scenario will happen to downtrend, and this cycle repeat itself over and over and over again. This is the psychology behind single, double, and triple candlestick pattern and formation. I clearly demonstrate that you can analyze these patterns using candlestick math blending much faster with your own naked eye and get the same result without knowing the weird name of these pattern and formation and its complicated instruction. I hope you like these 3 videos on single, double, and triple candlestick pattern and formation. I am always here to answer your question and sincerely wish all of you a good luck. And please don't forget to smash the subscriber button. This way you can get my new videos on time. That's all, folks. If you like this video, thumbs up and subscribe. Thanks for watching. Take care and see you next time.